Hi, thanks for joining me on my market report. My name is Mike, and this market report is on mortgage rates. We kind of go into what is impacting mortgage rates on a daily basis, whether it's economic data, whether it's headline news, maybe there's a certain sentiment in the market, the geopolitical news that pop up that could impact mortgage rates. If you're not aware, mortgage rates are based on mortgage-backed securities, which are bonds, which are bundled and sold on Wall Street. So kind of like the stock market, these do change on a daily basis, and sometimes multiple times if it's a volatile day within the same day. A little bit about myself is I am a loan officer. I do work with a national lender. We're here to help you guys any case possible. If you guys got questions about anything, whether it's different loan programs or about mortgage rates itself or just about the process in general, please feel free to reach out. We're here to assist you guys. We'd love to earn your business if you guys are looking to refinance or if you're looking to purchase. We're here to help. We're more than happy to write up that pre-approval letter for you guys to get that next offer out there. We got a lot of tools to help you guys out with and a lot of great rates and loan programs. So give us a shout, and we'd love to be able to see what we can do for you guys. In the meantime, why don't we jump right in this? We'll start with the economic data. This week, we got jobs data for the month of September. And today's the first day that we get a piece of that jobs data, and that is brought to you by the ADP. They give us the private payrolls on there. So the ADP last month was a revised lower. It went from August 374,000. It was revised lower to 340,000. Forecast come for 28 for the month of September. It came in much hotter at 568,000. Now we'll get tomorrow the initial jobless claims that we get every Thursday, but the big one will be, of course, Friday, which the Bureau of Labor Statistics will release their jobs as well as unemployment rate. Now it will be kind of interesting to see. We're seeing a lot of announced firings lately because you got a lot of people who are refusing the vaccinations, are being refused vaccinations, and being let go. And as a result, these people are not going to be allowed to go on the unemployment rate. So these people may not show in the numbers. We'll probably have to look at the U6 number in terms of labor participation, that people are out there that can work but aren't working. So this will be kind of interesting going forward next few months to see how this plays out. In the meanwhile, we got another item here we kind of look at on a weekly basis. It's nothing major, it's not market mover, but it is the brought to you by the MBA, and it's the mortgage loan activity report. It kind of lets us know if loans are increasing from one week to the next or if they're decreasing. In this scenario, because the rates did spike the other week, they did drop on both the purchase side and the refinance side on here. So not a lot as much on the purchase side, but obviously a pretty big drop on the refinance side of things. So on the news today, we got not a lot. Headline news, basically stocks are down today. They're looking at these jobs data. Of course, jobs data is important primarily because the whole precipice of the taper that the Fed's been talking about is based on jobs. If we're not getting the jobs into where the Fed wants it, then they may hold off on the taper. So again, those will be important. Also, we're dealing with inflation issues. Some people, there's speculation that maybe the transitory inflation they're talking about may not be so much transitory; it may be more permanent. And then another piece of the headlines is concerns over energy. We're seeing a lot of energy prices rising. Especially oil is up to about 77 bucks a barrel right now. But we're also seeing tight squeezes and constraints on energy in Europe as well as in Asia. So we're seeing some tight supply there. So let's take a look, see what's going on with mortgage rates today. I'll increase this here so you get a better view here. As you can see here, we're down about 6 basis points. Yesterday, we dropped much further than where we did the report. We ended up closing down 30 basis points, and now we're down another 6 basis points. Now, we did have worse pricing earlier on. However, those who didn't do a reprice for the worst yesterday, and it will couple today's pricing, you may see pricing be a little bit worse than what we saw after yesterday's close today. And then we'll take a look here how it looks like today, one day. So you see here a little bit of a spike when it opened up, kind of went sideways for the most part. A little bit of spikes here and there, and then we've kind of dropped again. This is kind of how it looks like today. today's reports. And let's put this back here. And then we got yields. Kind of the same thing. We're up, kind of climbing upwards. We're up about 1.53. We broke about that level that we talked about yesterday, that technical level, even though we were trying to break below the floor. Now we broke the ceiling, the opposite direction. And then we got another ceiling we're fastly approaching right now as well. We're down to about just under 1.53 right now. And we'll have to kind of see if we can hopefully maintain, drop that down a little bit here. Then I also got the 15-year fixed and 30-year fixed national average. So the 30-year fixed at 3.13 right now, and then the 15 years at 2.5 right now. So again, hopefully this will give you some ideas if you guys are out there looking to refinance or purchase. Give you some ideas as to where rates are moving. We hope this you find these videos helpful. If you like these videos, please smash the like button. We greatly appreciate your help out our channel. We thank you very much. Again, if you guys got questions, please feel free to reach out. Well, otherwise, have a great rest of your day. Thanks so much for watching. I look forward to see you in tomorrow's video. Bye-bye.